Okay, welcome back. We got the market, which is actually absolutely flat, and we got the Nifty Bank that is flat. The Nifty is up 140 points, right where it was when we started at 230. Jigar Mistry is with us now, co-founder at Buoyant Capital. Jigar, good to have you back on the program. Thank you for joining us. Let's just zoom in straight to what's happening on defense, Jigar. It's of course there is a real story. Which is playing out in terms of indigenization, etc. But I worry whether we're getting kind of swept away as investors. Some of the rises are really, you get scared. Look at what's happened with Mazgaon or even Cochin today. What is your sense, Jigar? Have you looked at this space in any detail?
Right, Prashant. So, good afternoon. Great as always to be on your show. We have not looked at it in a great detail, but I think what's really happening is that whereas there is a very clear-cut case of a lot of incremental government spending, given that, let's call it a skirmish between India and Pakistan, and following that, India across the board sort of showed a much stronger presence. Naval and Army was always strong. The Air Force was much stronger this time around. And clearly, we see that as a win of more of a DRDO-led sort of process rather than the companies-led process. Now, obviously, the governments are going to spend a lot more, but I doubt if a lot more of these orders are going to come to these companies. If anything, India did well, despite the delay that many of these companies have caused in delivery, could be sort of Tejas aircrafts, or maybe Vishal, the new sort of aircraft carrier. Just because sort of the wave is so positive in and around this space, if you check the number of shareholders that many of these companies have gained over the past 2 years or so, it tells you that it is much more sort of a frenzy, which you cannot really justify if you try to do a reverse DCF on a lot of these businesses. So whereas we are interested in this space, but it's difficult to buy a business without sort of having a very large leap of faith.
So you don't own anything in this space, right, Jigar?
No, not really anymore.
Jigar, in the past, you have tracked IndusInd Bank. Is it a part of your portfolio?
No.
Okay. But what have you made of the series of irregularities that have crept up in IndusInd Bank? And as an investor, do you think the worst could be in the price? Because incrementally for bad news, it's not that the stock is falling. At least for now, do you think the bottom may have been made, even though the recovery takes some time? I mean, how would you approach IndusInd Bank now, or think about it?
Hey, Rima. So I think, whenever you buy a microfinance business, that's always a tricky one. If you remember, Vikram Akula wrote a book, Micro Meltdown. And that's widely considered to start in and around the same time Mohammed Yunus started Grameen in Bangladesh. Now, the cumulative profit that SKS Microsystems made between 2000 and 2010, they had to write off twice the amount of cumulative profits in 2011 when the Andhra problems crept up. So it's an extremely cyclical business, and therefore these institutions have traditionally sort of stayed separate from the overall, bureaucracy of a banking system that it brings. When that size is very large compared to the other traditional banking assets, there is a propensity for sort of, bad news to creep up, which the traditional management either may not be fully aware of or may not be all that willing to acknowledge. So I would say just the construct of the system was such that this was not entirely unexpected. Once that has transpired, we don't really know if all of it is in the price or not. But as you said, the price has held up fairly well. And if somebody had, some space left in the turnaround story brackets, then I think it might make for a reasonably interesting business to at least start looking at. But frankly, at least we don't know on whether that is the case or not. So we don't own it as yet.
All right. Hi, Jigar. Good afternoon. Good to see you. And Jigar, I need to talk about our core sector. This time I'm asking you about silver. Silver has actually underperformed what gold has done. And we know here in India, there's only one way to play it, right? Hindustan Zinc is the only one that you can play if you want to play the silver uptick. And as we speak, it's hit 1,04,000 rupees per kg, which is the lifetime high. What's your view on silver as an asset? And I think you were positive on the conglomerate, right? One of the largest metal conglomerates here in India, Vedanta. Tell us more.
Hi, Nigel. So yes, gold became sort of more like a no to dollar than a yes to gold, right? Obviously, Indian households own gold for various reasons. But if sort of I'm a global asset allocator and I'm seeing dollar index fall from 110 to below 99, I have 2 or 3 options to get in. Maybe I can allocate more to emerging markets, but then China on a rolling return basis hasn't made me money. So what else can I look at? That goes true for most countries that are, looking to de-dollarize in whatever shape and form they can. Now, Western economies, like say Canada, I think sold a large part of its dollar 2 decades ago. So Western economies don't de-dollarize by gold, but at least India, China, they would do that, looking at gold and various other things which are non-dollar. And therefore, when you denote the price of these commodities into dollar terms, that will sort of show a reasonably decent increase. Now, again, we go back to traditional formats. We always used to have these gold to silver ratios, and those ratios started hitting at the low, and now that gold doesn't really have a propensity to go up, so let's sort of all buy silver. So I think it's part of that whole age-old cycle, which will keep repeating itself. Our sense is that the way in which it sort of manifests into an equity investment in India are the 2 names that you just mentioned. If you get some decent liquidity, then the zinc asset may make some sense. But in absence of which, if you're generally positive on the commodity complex, which we are, then I think the conglomerate makes a lot more sense. So I would say the silver to gold is much more a cyclical play, more a no to dollar than a yes to gold or silver. But the way to play this is to buy commodity stocks.
Okay, got that point. Jigar, hi, good to have you on the show today. Finally, before we let you go, tomorrow's RBI policy. Everyone's expecting rate cuts, maybe tomorrow, and of course, more further down the line. But the question is, what should one play, in financials? Because there's one worry about whether NIMs will come under pressure, because the moment those rate cuts happen, you have to pass on to your end customers. By the time your deposits are repriced, it takes a while. So NIM pressure is a concern. But on the flip side, analysts are arguing that this will at least boost credit growth, and the market's hungry for growth. So you tell us, what do you like and what are you staying away from within the lending space specifically?
Right, so first, I think we don't really see a space for a very large rate cut, right? Because that has to follow the mother curve, which is always the US Fed fund target rate. And that has not really been cut in quite a while. And given where we think, the impetus of the inflation will take the US rates, India will have very little room to start cutting. I think the policy rates as well as the market rate. So Fed fund target rate minus repo or the 10-year differentials. I don't think there has been a smaller sort of differential in the 23 years that we have the data for. In which case, the RBI will also be wanting to look at how the whole tariff tantrum plays out before committing big. So if at all they cut tomorrow, my sense would be 25 bips, which would make sense, anyways, you also mentioned a lower yield means that assets gets repriced faster than liabilities. And the ones with floating sort of assets are a lot more vulnerable. And obviously the microfinance, smaller banks actually get hurt more. So if you must play something in the banking space, then the fixed lending 10-year banks make a lot more sense. Eventually this needs normalize. So it's again a tactical move, not really something that you want to do every day. But for the day, I think the one with higher fixed proportion of lending and a floating sort of liability will be the ones to benefit a lot.
Okay, all right, Jigar, good conversation as always. Thank you very much. Good to have you with us here.